We are the premier independent talk radio network, the Genesis Communications Network, GCN. Jim Brown.
You know, I don't like paying my automobile insurance. I'm sure you don't either. And you kind of wonder, how do they determine what you're being charged? And if you get a DWI or if you have an accident, then you're going to pay a lot more, right? Well, not particularly so. There's been a couple of new studies that I've noticed in the last month or two. Western New York Law Center did a very detailed study about insurance rates and found that your credit score is a bigger factor in what you pay for your insurance than does your traffic record, like things like DWIs and accidents, which is very puzzling to me. And I'm trying to figure out just where some of these insurance companies are coming from, to put it all in perspective. So I want to try to get an expert to talk a little bit about this very thing. Ken Davidson is my guest. He's the principal partner with Eagle Independent Insurance Agency, located over in Dallas, and his website's on my website at JimBrownUSA.com. Hey, Ken, glad you joined us today on the Common Sense Show.
Hey, Jim. Happy Sunday to you.
Well, same to you, and you guys over that way, a little hot, but we'll make the best of it. But, Ken, let me ask you your thoughts on this. I read this new study out of a New York law center, Western New York Law Center, and what they're saying, they show some very interesting facts. They show, for example, a female driver with a high school diploma pays 31% more than a male with a high school diploma. Same level, and maybe even working for the same company. Great disparities, and the thing that keeps coming up is credit scores. Tell my listeners, if you will, where are insurance companies coming from when they use someone's credit score? What is the relevance of a credit score in terms of how safe you're going to drive down the street?
Okay, well, first of all, there's a difference. There's a credit score, which is a FICO score if you're going to apply for a loan or a car, et cetera. And then there's an insurance score that is technically derived, my understanding, from credit scores, from some of the information. It doesn't hurt your credit, by the way. I just want to throw that out there. When you go to different insurance carriers to shop your quotes, it's not going to affect your credit score. But really what it is it's a predictor. Insurance the rates and premiums are all based on actuarial science, for lack of a better term, I guess. But it's a multi-variant rating, and that is just one of the factors that they put in there because they've got studies that show that, based on a person's credit history, its responsibility, and it's a predictor of future behavior and their driving patterns and the frequency of them possibly getting in an accident or getting tickets. So it's very interesting, but it's not the only thing that weighs on, creating the premiums.
Yeah, but it would seem like in their study, for example, they said if you've got a high credit score, not a good credit score, a high credit score, because someone who just, you got a laborer out there pays his bills on time, takes care of his business, maybe he just got an average credit score. But if you've got a good credit score because, you're in a high-paying job, you can get a DWI and actually still pay less or get into an accident and still pay less than someone who's never had a DWI, never had any accident whatsoever, but they don't have as a high credit score. That strikes the average person. Wait a minute, that's kind of bizarre. Guy's good, hard-working guy and doesn't have a lot of money, but pays his bills, lives from paycheck to paycheck, but always pays his bills on time, never had an accident, doesn't drink, and yet he's stuck with a higher insurance rate than some guy who has a DWI or gets involved in a major accident. Does the actuarial research show that makes sense or not?
I would say that, when you put it that way, it sounds like crazy town. But, I think that there's more people that the insurance score probably benefits than actually hurts. Going back to what you said earlier, this was very interesting. You said it was the young lady, high school diploma. She was paying a higher rate than the male because the male's credit score was better, which is very interesting because the highest rated drivers are young males. So it just really depends on how much the individual insurance company uses the insurance scoring in their model. Some insurance companies don't use it at all. That's why the advantage, there's a very simple solution to this, and what consumers need to do is they need to find an independent insurance agency, because when you go to a captive agent, the insurance companies just sell one product, and you're going to fit in their box however you're going to fit in their box. They may not care about credit score, or you could have, 20 tickets and a great credit score, and they're going to write you. If you go to an independent agent that represents 10, 20, 30 insurance companies, they'll be able to find you the best insurance company for each specific need. No two insurance risks are alike. It's not a one-size-fits-all, product. So I'm different than you are. You're different than your next-door neighbor. And, you may have different credit. You may have accidents. Your wife may have some speeding tickets. It's all it just varies. And you just got to have an insurance agent that can go and shop that for you. That's why, everyone's getting online and getting all their own quotes and, give it to a professional and take the hassle away. They'll get you where you need to be. That's for sure.
Yeah, you're right about shopping around. A lot of people say, well, I've had the same company for 20 years. I kind of know the agent that sells. When you say writes insurance, you're meaning selling an insurance policy. But if you shop around, you've got a lot more options. You got to do that just like you do your medical costs and so much of what you do these days. And it's a lot easier when you got the internet. But now back to the credit score issue, I see that some states have outlawed the use of credit scores. California, Hawaii, several of the states say, you cannot use it. So I guess from their point of view, they're saying it's not a fair balance or estimate or a fair picture, and they say they shouldn't be used. So it's a controversial area. Wouldn't you agree?
I really agree. I mean, the insurance is all regulated on the state level. So it's however each state wants to do it. The insurance companies do have to file whatever they think, whatever their credit model is, or insurance score model is, and that's what they call it with the State Department of Insurance. Again, it goes back to, how old are you? What kind of car do you drive? Where's the car, garage? What is the address? Do you live in a highly populated area where the frequency of you having accident is going to be higher than a rural area? I mean, Louisiana, you guys are like always in the top 5 for the highest insurance rates, with Michigan always being number 1. Why is that? There's just so many different variables involved. But you do make a good point. I mean, there are I think there's more anomalies than there are just regular occurrences when it's really not benefiting the insured.
Yeah, and you made a point there earlier about what your zip code is, and I know I have some friends. I don't live in New Orleans, but I'm in there most weekends. I'm often in New Orleans, and I have a little family place down in the French Quarter, which, as far as rating, would be high. There's a lot of thefts and that kind of thing down there. But I had a couple of friends living down there who said, "Look, we have off-street parking. We pay for covered parking to protect our car." And they said that's something that when we give the zip code, the insurance company says, well, you live in a really dangerous area where you're more likely to get your car stolen. And they made the point, yes, but I drive to work, and then when I come back into that zip code, my car is in a locked garage. And when they made that point, that apparently made a little difference in the rate. So you gotta understand these things, because there may be some mitigating circumstances that you can suggest or put out that can kind of help you. If you come to an independent agent like yourself, you say, look, I live in a kind of a rough area, but my car's in a garage every night. This makes the difference. I want to come back and talk some more and put this in perspective. Talking insurance, which nobody likes, but it's a necessary evil. You got to have it. You got to deal with it. Ken Davidson is my guest. His website is eagleinsured.com. You can find that on my website, www.eagleinsured.com. Hey, Ken, give me just a minute. We're going to take a quick pause. Got some more questions for you. Okay, yeah. Even with an independent agent, and I'll be before you join me this morning, we're here approaching the 10th anniversary of Hurricane Katrina. And I was telling my listeners about how I experienced that with so many members of my family. And I know so many folks that just lost everything but the shirts off their back, not knowing the storm was going to be that intense and not being prepared, thinking they were going to come back to maybe a little damage. They lost photographs, passports, birth records, everything you could think of, and then you go back in and deal with the insurance. Okay, I lost all my clothes. How many shirts did I have? I want to make the claim on that. How many pair of socks? How many dishes did I have in the kitchen? I mean, if you really not make this available, I guess you're going to have some problems with your insurance company in justifying a claim you make. Is that right?
Indeed. I mean, which everybody should at least once every 2 or 3 years do a complete evaluation and an inventory of their items they have. But generally speaking, on a homeowner's policy, it's a certain percentage of the insurable dwelling amount. So if you've got a $100,000 home, your contents is generally insured for either 40 or 60%, depending on what state and what policy you have. So you've got a kind of a blanket coverage there of like $60,000. The main thing is make sure you got the right insurance, i.e., rising water flood insurance is not covered by a standard homeowner policy, and a lot of people got nailed and didn't have any insurance. We just experienced that in Texas bad. So know what coverage you have and what you're paying for. Get with an agent.
Yeah, that's a good point about defining what a lot of people just don't realize why you have to have flood insurance. What I usually give as an example is, does the water come from the sky down or does it come from the ground up? And if it comes from the ground up, you've got to have a separate flood insurance policy that you buy that you can get through an independent agent like yours. It's underwritten by the federal government, but if you don't have that and it comes from the ground up, then you're not covered, are you?
No, you're not. There's a lot of things out there, too, that, back to the auto insurance, the state requires if you own a car, right, you have to have minimum liability limits. And a lot of people just get by, hey, say just says I need the minimum limits. That'll bankrupt you in 2 seconds. In Texas, it's 30, 60, 25, which means if I'm driving down the road, I have the state minimum limits, that I have $30,000 that will pay for if one person is injured. If I cause an accident, $60,000 total for the car. So let's say there's 4 people in this car, and $25,000 for property damage to that car. So if I just T-bone some car with a bunch of people in it, and they're all hurt, God forbid somebody was killed, I total that car, I have $60,000 is all my insurance is going to pay for all of those medical bills. I am going to get sued. I'm going to get bankrupt. And then, when's the last time you saw a $25,000 car driving around, in the city or something like that? There's a lot of them, don't get me wrong, but, a BMW's $40,000 up, and you're responsible for that, and that's what people don't understand. So you've got to carry higher limits because then you'll go bankrupt, then your credit score is going to get bad, and your insurance car rates are going to be more expensive in the future.
Well, that's why I want to tell my listeners that you really want to deal with an insurance agent, an independent agent in the case of Ken, who can put all this perspective. Now I'll give you another example of what happened to me. The story, I had a Supreme Court justice when I was a Louisiana insurance commissioner for a few listeners out there for almost 12 years, and Supreme Court justice called me. He'd just gotten elected, and he was all excited. He goes out and buys himself a top-of-the-line BMW. Drives off the lot, goes a half a block, and is broadsided. So he goes back to the car lot and says, listen, this is broadside. I want to get a new car. They said, well, that's fine, but since we sold it to you and you drove it, it's depreciated about 10% now. He says, what? I drove a half a block. So there's something called gap insurance that allows you to protect yourself for that difference. So, which is something Ken can tell you, but if you don't know that, then you can, as you say, Ken, no matter at what level you are, you can be the victim, can't you?
That's exactly right. Particularly these days, a lot of people that are buying the higher-end cars or want to, they lease the cars, and that's where you could really get in trouble if you're in an accident. And just like this poor gentleman, cars do depreciate immediately. Some insurance companies also offer, that's why it's important to shop around or get an agent to do it, because they have coverage that'll basically replace your car if it's 12 to 18 months old. They'll give you exactly the same car, the same value that if you bought it 12 or 18 months ago. So if the car really depreciated over 12 months, they're going to replace that car with the same car that maybe cost $3,000 more than it did 12 months ago. So these are all different, things that, you can massage, kind of like a cafeteria plan, if you will. And, if your insurance score isn't that great, so talk with your agent, combine your auto and home together, make sure you get multi-policy discounts, make sure you're getting, maybe you have accident-free discounts that an insurance company can give you. And then you'll go ahead and get rid of, the whole idea of, well, I've got a bad score, my rates are going to be high. That can all get taken care of. It's a combination of things. It's customizing custom-tailored insurance for your specific needs.
Ken, what is the toughest type of insurance for people to get, or for you as an independent agent to find? In other words, you might find plenty of people selling car insurance, but maybe not as many with homeowners or health or so many different areas. But what is the toughest area right now to place, or someone comes in and wants some insurance for you to find a company to sell them? What's the toughest?
Well, I tell you, we pretty much stay away from the health insurance these days. We just we concentrate on the property casualty. That's your auto and home and everything else. I think it's really not on an individual basis. We write a lot of commercial and business insurance, and there's some different risk out there that can be a little bit more complicated. But we represent so many different companies. I mean, may call it 100 if you will. So we can pretty much write any kind of policy. Everything's insurable, right? It just all comes with the premium.
What you're going to pay for it, right? So
that's exactly right. So.
Right. Hey, Ken, listen, thank you for being with us today. Ken Davidson, independent agent over in Dallas, Texas, Eagle Independent Insurance Agency. His website's on my website, is eagleinsured.com. Ken, have a great weekend. Thanks for spending some time with us. Hope we can talk to you again in the future.
Hey, Jim, I appreciate it. Everyone out there, have a great Sunday.
Take care.